All right. I found my board, Studio B, in my vault. Awesome. Unlock your brain. Have a tasty vault. All right. Well, thank you very much for your request. What we're covering today is Lucid. You know, the EV company known for the Lucid Air vehicle. I'm going to take you through a quick little bit of history, and then let's talk about why are they in the headlines and what's going on, because you asked me to cover it and you're getting it. So Lucid, where did it begin? You know, it was founded in 2007, and it had a different name. It was Atieva. And the Tesla VP, Bernard C., was part of that, along with co-founder of Astoria Network, Sam Wang, an inventor, named Xiaopeng Lin. I may have butchered that name, do the best I can with it. And originally they were going to focus on building EV batteries and powertrain for other manufacturers. That's what they were going to do. They're still doing some of that today, but it was all about, no, let's go build our car, the Lucid Air. And the CTO, Peter Rawlinson, would later become the CEO, and he was, believe it or not, a chief engineer of the Tesla Model S. So when they're coming together and they're trying to get investment from people, people are saying, wow, you guys know what you're doing. You're all coming across from these technology areas, and Peter coming from Tesla themselves. Wow, this is going to be a competitor to Tesla? Well, not really. We intend to build higher-end cars, probably just a little bit above Tesla. Okay, well, let's see how that goes out. There he is. By the way, there's Peter. Looking today, you know, not as young, not as happy as he once was, because he's still working hard with what's going on with Tesla as a competitor and with the stock market for Lucid. So, a quick history. They rebranded Lucid Motors back in 2016, and they announced that they're building what they're calling AMP-1, Advanced Manufacturing Plant in Casa Grande, Arizona. Okay, fine, so now you got yourself a factory up there going on. And then 2018, but they spent their time building this and getting it all done. 2018, Saudi Arabia Public Investment Fund, PIF, says, hey, we're going to invest $1 billion in this, and we have an agreement for them to build AMP-2 near Jeddah, which is the second largest city in Saudi Arabia. So, and we're going to be building these. This is the Air sedan. It starts at $75,000 all the way up to $250,000 in what they call the Air Pure, Air Touring, Grand Touring, and Sapphire. The Sapphire is $250,000, but with crazy horsepower, up to 1,234 horsepower and a 500-mile range for the Sapphire, and then a lot less than that for the others. But it's a beautiful mid-sized sedan. So they said, hey, we're going to be the BMW, Mercedes of all this. We're going to be somewhat above Tesla. But the Model S kept getting refined. And the Model S Plaid, you know, that thing is, you know, close to $200,000, you know, depending on how you have it outfitted. And so it ends up they're sort of competing at the high end with the Model S. Maybe they're a little bit above it, just a bit above it, and arguing that they've got more and longer range and a lot more horsepower. Nonetheless, good-looking car. So in addition to the Air, they announced, they were kind of teasing talking about it back in 2020, the Gravity SUV. Pretty good-looking vehicle, going to be adding to the line. So they have the Air and the Gravity built by Lucid, but this one will be rolling out in 2024. Probably 2025 because they haven't really been on time with stuff, although they're making announcements and teasing these things because they hope to drive the stock price for people thinking, wow, all these products coming, everything going on. Then they go to the era of getting on the stock market, which is what I just mentioned. They're trying to help with the stock price. First in 2019, Peter Rawlinson was named CEO, going from CTO. Then they completed AMP-1, remember the Advanced Manufacturing Plant in Arizona, with a lot of room to expand on the property they built. And then in July, this is 2 years ago, a little more than 2 years, they do a SPAC IPO and get $4.5 billion out of it. $2.1 billion was from the SPAC itself. And again, SPACs is kind of a shortcut to get your company onto the stock market. You merge with sort of an empty company that's already on the stock market, and ta-da, you're on the stock market, and you announce that you're changing the name, it's really you, and that old empty company is gone. So that's a short explanation of how a SPAC works. Then there's usually money in a SPAC too, and in this case, $2.1 billion from the SPAC, and then $2.5 billion in PIPE, which is a way of private entities or individuals investing in public stock, you know, not buying it through an offering on the stock market. So a PIPE was another $2.5 billion from the Saudis, and they paid a premium because SPACs usually go out at 10. The premium they paid was 15. So gave a valuation of the company about $24 billion. And the Saudis own 60% of it. So now they got $4.5 billion, and what could possibly go wrong? Well, they go out and they go all the way up to here, well, into the 50s per share. Then it goes down again, and then in the middle of COVID, they hit a high watermark there. That was a big deal. They've been sliding down with announcements and delays in delivering the cars ever since, unfortunately. And, $91 billion was the peak in 2021. That was the implied value in the stock market when the stock was this high. Now it's under $9 billion. And by the way, that peak evaluation in November 2021, they had delivered under 200 cars. So this is all future hype and everything. And as the losses and everything go out, this is a real company with real factories and real things going on, but they don't have any profits sitting out there, and they don't really have a path to show that very clearly. And so now they're sitting there at $3.80 a share, and the valuation is at $9 billion. That's 93% off of the peak valuation here. So they need to start delivering cars and find a way to show that the profits are rolling forward. So let's take a look at how that works in EVs, because you're not expected to have profits if you're building factories and having marketing and then selling cars. You're not going to have profits for a while, but at some point in time, the market can lose patience with you. That's what's happening to Lucid. Markets losing patience. So what's up? First of all, what are the problems they have that are causing the market to lose patience and not support them as well? First of all, they announced they were cutting the price of the car anywhere from $5,000 to $12,400, depending on what model you made, and certain of those vehicles are not eligible for the government $7,500 subsidy that maybe a small Tesla Model 3 might be, or the small Nissan or the small Toyota. They get access to the $7,500 government subsidy. Lucid, at the value of this vehicle, higher-end vehicle, does not. And so revenue was down because they made the price cut. That's never good. Hey, you guys hardly are out there. You haven't moved your 10,000th car yet, and you're already cutting the price? What's going on? Well, sales and productions were down. They only produced 1,500 cars in Q3, sold 1,457 of them, and the annual total down to 8,500 from 10,000. So now you've cut the price, you're not making as much, and the market starts saying, wait a minute, are people buying your car? Are you getting enough orders? Well, we're going to find out about that in just a minute. And then Aston Martin announces a partnership that they're going to provide motors and batteries to Aston Martin. Remember in the beginning that the original intent of the company wasn't to have their own car with the risk of designing something that the consumers would like. They were going to build batteries and motors for others. Well, they announced they're going to do it for Aston Martin. But they're still trying to be a car company selling their own car. So that's what's up. With all this stuff up here, the market lost confidence. Now let's talk about EV headlines in general. Because if you go out to build an EV, there is a reasonable point of time where you're going to have big losses. And all the losses are is you're building a factory, you're designing your car, you're getting your battery vendors, all the things you have to do, and you're going to lose money on that because they haven't sold any cars yet. And you design a car, and then you got to get the cars, there's regulations. You have to do crash testing and a lot of things. So you're going to have losses until you sell those first cars, and then the losses drop down as you go out and sell them. That's what happened with Tesla. So let's go take a look at this. So now, EV makers lose money per vehicle. They need subsidies. You hear this headline, let's dive into it and see if that's a true headline or it's just business media writing headlines that really aren't that true. Take a look. Ford lost $62,000 per car in Q3. What they did is they took the number of EVs that Ford sold, the Lightning pickup and whatnot, and they took the loss from EVs that they said they had, and they divided it. Oh, you lost $1 million, but you sold 1 million sticks of gum, so you lost $1 per stick of gum. You see how that would work? Well, they're diving into the numbers to do that, to say Ford lost $62,000 per car. Lucid lost $227,000 per car because they only sold 1,500 of them, and they have all those costs for the factory and everything. Did they lose that many per car? Yes, but take a look at this. You look at Rivian. In Q1, they compared the losses to the number of Rivian trucks sold. It was 124,000. They compared the losses to the number of Rivian trucks sold in Q2, 67,000. And in Q3, 30,000. Do you see it dropping down? It's because Rivian's going in the right direction. And a couple quarters from now, they're actually going to be making money. So when you see headlines like this, a lot of times business headlines, you have to do a little decoding, and I hope I just helped you with some decoding. They didn't actually lose this much per car sold. That's compared to the total expense and loss that the company had. So massive EV investment is ahead of profits. And the EV market is having reality starting to emerge. The early adopters in the US, the people that are willing to pay a little bit more, they believe that it's about done. That between Lucid and Rivian and all Tesla, that, and Fisker, vehicle I own, a company that I'm invested in, all the early adopters are done, and we have interest rates on car loans, and consumers are reluctant to pay the premium that you pay for electric. If you compare two side by side, electric costs more, which is why the electric vehicles, for vehicles that are more economically priced, they want that $7,500 government subsidy to make it more affordable. And lastly, charging infrastructure. There's been a couple articles. I read one recently in one of the popular large news publications that you can go Google it. And this reporter, she drove around Los Angeles and everything trying to get recharged, and she was counting the number of times out of order, wouldn't take credit card, or it had just been vandalized and broken. 40% of the chargers she went to were unusable. And these all have to be the fast charger, because if you have an EV, you know that you need a supercharger. That's what Tesla calls them, the supercharger stations, because in about 20 minutes you can get more than 50% into the battery. That's big. So plug in your car, go get a burger, come back out, 20 minutes, you're done. The average time to gas a car is 7 minutes. So it's about 3 times longer, but nonetheless, that's supercharger. All the small chargers, like going to the mall, you plug that in, give it a credit card, and it's low power charge. You may only get 10-15%, and you're in the mall for an hour and a half. So it's helpful, but the charging infrastructure, people that own EVs are starting to complain about them. Hey, there's only 5 of them at my work, and there's 15 people have cars now, so I don't get to charge at my work unless I get there early and I'm the first one there, and then I plug it in. Or I plug it in at home. I recently added a charger to my house along with a 40 amp fuse, and I did it right in the garage, right next to the fuse panel, and I have a fairly new house. Well, guess what? It was almost $1,000 between what I paid the electrician to come do it, so it was done properly. So if I ever sell the house, this is done properly, this is licensed, this is to code, as they say, and I put on one of the charge boxes in the garage with a 25-foot cord onto it and a cord gatherer. So to do it right, that was like $1,000. So even if it's done economically, it's still costing you, most consumers, about $700. Have an electrician to come get your garage ready and put a charge box there. So that's a cost on top of buying the car. So the charging infrastructure is really starting to show up in that we don't have enough service stations. Recently, you can go back and look at the Fisker case study that I did, and I talked about charging infrastructure and also talked about it in the Tesla case study, pointing out that there's a side of Tesla that is like Chevron and Exxon. It's at the service stations for your EVs, and they're making contracts with everybody. So it's another way that Tesla, Elon Musk, crazy like a fox, now we're all paying him to charge our EVs no matter what. Now, lessons for you and me. I hope that was useful and lucid and you see what's going on there. It says, first of all, you got to have product market fit. The first customers for something like the Lucid Air can be an illusion. Those can be early adopters. The second customers are critical. In other words, you start repeating it and gaining momentum, and you codify your sales systems and you replicate your sales cycles. That's what's important. Because if that's not happening, all you had was early people that ran out and said, that's very cool, I'll buy one. Those are your early adopters. Then you need to get to the second customers, which is regular customers being attracted by your marketing, going in and buying the vehicle. Product market fit is everything. And I'm wondering if Lucid really has long-term product market fit, given that the demand is kind of loosening up on these, but they appear to be nice cars. But just because they're nice cars doesn't mean someone wants to buy that rather than the new Mercedes, rather than the updated Tesla Model S. Maybe there's PMF going on. Then forecasting. TAM and SAM is everything. Total available market, serviceable available market. Total market for EVs, wow, there's a big market, I could go out and do this. But what about the serviceable available market for yours, the people that would buy yours that you can reach? So you could say that there's 330 million people in America, and 200 million of them, are the total market for jeans, denim jeans. But when you get down to the kind of jeans you're making, whether it's women or men's or, kids jeans or like old Levi's, Wranglers, suddenly the serviceable market is less. You have to understand this. And it feels to me like EVs, that they're kind of only looking at big picture. They're not really looking at the number of competitors in EVs, charging infrastructure. So forecasting is really key. It's also key for you. Everything I just did, if you Googled SAM and TAM, just type forecast, SAM and TAM, TAM and SAM, you'll find articles written about this. I think will be very helpful for you forecasting your business, which is critical, especially now with the economy that is burping a little bit, to kind of have a forecast, trim it down a little bit, and be ready for whatever the economy throws at you. And lastly, beware of the math and control the dialogue. If you're out there trying to get investment, you can't allow the investors to say, well, you lost $227,000 per car. You say, wait a minute. Technically I did, but I knew there'd be a loss here. Here's the chart with the reasonable forecast that shows how in the future we're going to cross the line to profitability. Because if you don't, the media will find something to write about, and those media headlines about the losses per car are technically correct based on math, but it fails to point out that, hey, this is only a year and a half since launch or 2 years since launch. This company never said that they would be profitable until the 4th year of selling these products. So lessons for you and me, I think, are in there, whether you're building a case study right now on a given market that you want to get in and put a business plan against that case study for the market and its growth, because that's what you're going to be doing, building a case study to talk about the market growth and what you believe, and then here's the business plan for something that you believe is going to be successful selling into that, and this is why you're the people to do it. Anyway, that is the breakdown of Lucid. You can see, I think they got some headwinds and some challenges ahead, but maybe they come out of it. But thank you for the suggestion. If you got suggestions, put them down below. What would you like to see me cover? I'm looking forward to doing the next case study. I'm looking forward to breaking it down for you. And now, let's go back to the main studio and wrap up. All right. I hope that was useful to you and good information. The Lucid case study is one of my favorites of the last couple months because there is such things that we can apply exactly to startup businesses that you may be running right now. And so again, like I like to say, whether you're running a t-shirt company in Berlin or a tech company in California, there's things you can learn and apply as we all get through this economy and build great companies along the way, because somebody's got to drive it through, build jobs, build to the future, and that's you. These case studies here from the Biz Doc archive also might be interesting to you. Please check them out. Subscribe down below and hit the bell so you get notifications. And until next time, I'm Tom Ellsworth, the Biz Doc, and I hope I left you better than I found you.